stop me if you've heard this one before, but Robinhood is once again screwing over users. Robinhood users say the trading app won't cash in their profitable bets against Silicon Valley Bank. So if you look at some of these, such as SVB, the ticker symbol SIVB, people have puts, but when it's not trading, the equity is not trading. Well, that means inherently the options aren't trading. Remember what an option is. A call is the right to buy 100 shares per contract of a certain equity, the underlying asset, on or before a certain date. Your puts are your opposite. It's your right to sell it. So you still have that contract. That contract is a legal obligation. So even if SVB is not trading, you still have the right to sell. And apparently, people are starting to point out that Robinhood is not letting you do it. It's all over Twitter and it's absurd. So they're almost doing the opposite. Usually when something is halted, they only let you do position close only. And if you remember, not to bring up a nightmare from your past, a lot of people were right on GME, a lot of people were right on other stocks, and it was starting to rip and they wouldn't let people buy. They took the buy button. In this scenario, once again, when retail has the opportunity to make money from selling, they're not allowing you to sell. And what's crazy is if the contract expires, if it goes back past your expiration date, you're not making money. The contract's expired. Even if you're in the money, it's not going to auto exercise, which I think it's a term referred by X, but that typically doesn't happen when something's frozen. But people still have the contract. On a personal note, I'm not involved in this. I don't have SVB puts or puts on other banks that are currently halted and I'm impacted by, but there are a lot of people, a lot of average people who have this, have a huge profitable position on paper, and surprise, surprise, according to Forbes and many people on Twitter, Robinhood is screwing them over once again. Now, obviously, I implore you to do your own research on this situation, but if you're not noticing a clear trend with this absolutely horrific company, I don't know how to help you. No one should be using it because time and time again, they are going to do the exact opposite of the mythology of Robinhood. And instead of stealing from the rich and giving to the poor, they are stealing from retail and lining their own pockets. And if you read some of the conversations going on, the support is absolutely wild. You could look here at Slap City Fight Parks. You can see exactly what Robinhood has been telling them, and this just isn't how most legitimate brokerages operate. Wall Street mods are even censoring posts about it. What is going on? So this is the OCC. They make sure everything is running properly in the world of options. This is basically the major options, I guess, regulatory arm, for lack of a better word. So subject trading halts. When will they resume? What does this mean? Removal by X process. So X process is what the normal process for options. In this scenario, these stocks are halted, so you can no longer use X process, which is the automatic processing of what's going on in the world of options. As of March 14th, 2023, the below options have been removed from the automatic exercise in expiration processing. As of March 14th, 2023, the below options have been removed from the automatic exercise in expiration process because either trading has been halted in the underlying securities. That's exactly what happened. Signature Bank, broker to broker settlement exercise. What do we have here? As a result, all exercise and assignment activity for SBNY options beginning March 13th, 2023 will be subject to broker settlement. So the X process, the automatic in the money exercising, not happening. Now this comes up to, are you with the right broker? And a lot of people are finding out that they are not with the right broker. Unfortunately, this is a very serious thing. And a lot of brokers saying, nope, we're not allowing you to exercise it, even though people want to. Good morning. Thank you for contacting us at OCC. Once again, that's kind of the regulatory arm that is overlooking all the trading of options. SBNY stock is halted and has been removed from X process. Your brokerage firm may have exercise restrictions in place in an effort to control their operational risk. If your brokerage firm prevents you from exercising your puts, will then expire without value on their expiration date, even if it's in the money. That's what this is saying. Is once again, brokers are basically saying, go kick rocks and we're going to screw you over. We've seen this before. We saw it when they took away the buy button, and now they're actually taking away the exercise button. This is crazy, and this just shows how shitty some brokers are. On 3/14, National Securities Clearing Corp, the NSCC, said it will no longer accept SIVB and SBNY exercise, so they're getting rid of the X by X process. That's not really the crazy part. You have to get rid of it when the underlying is no longer trading. Like, that's not the crazy thing. The crazy thing is that brokers are not letting these put holders exercise, or really even the call holders exercise. Settlements will be by broker by broker. What does this mean? In short, things are about to get F. Put holders will get wiped out, even if they're up money. That's the crazy thing, is people have a winning lottery ticket and they are not being allowed to do what they want to do. We have a list here, but obviously there's big focus on SVB and SBNY. Expectation versus reality. Normally, if you buy a put and a stock goes to zero, you would make a boatload of money. Wrong, not this time, not on SVB. You can only gain cash in two ways: sell, exercise for SVB puts. Depending on your broker, you might not be allowed to do either. Well, you can't sell right now. It's no one is arguing really point A. I don't know if Ming Zhao is, but you can't sell if the market's not actively trading. Like, there is no market, no one's buying, no one's selling, because the underlying isn't trading. So the A part doesn't make sense. The B part, that's where some eyebrows are definitely being raised. What should I do before diving into X by X and broker to broker, etc.? All mean for OTC. Let me knock out the urgent questions first. When will they resume trading? No one knows. On OTC, probably after they're delisted. So the listed exchanges, they're not actively trading, so you can't have X by X. X by X is the automatic exercising if in the money. This is it. My broker won't let me exercise. What I do: open an account at your broker that allows you shorts, then request an ACAT transfer your put. Short list of brokers who allow shorts: Trade Zero, Cobra Trading, and Trade Up. I've never used these three, so I can't say if they're good or bad, but apparently these are brokers who allow you to short, but I have nothing to do with them. Trade Zero, per the OCC, no options or in SVIB will be automatically exercised. Once again, the automatic exercising is X by X. That does not happen when the stock is no longer trading. The underlying is not trading, so you have to do a manual exercise, and that's exactly where people are running into issues on things such as Robinhood, where they're like, no, we're not allowing you to manually exercise. Trade Zero clients holding puts in SIVB or SBNY or anyone else opens a Trade Zero account and complete an ACAT transfer of it. So basically, they're saying transfer where you hold your puts to a different broker, a broker that allows you to go short, because inherently, if you exercise a put, you're selling stock. And if you don't have the underlying, that is probably the best thing you could do. I'm not personally in this situation. I want to make this explicitly clear, but it sounds like the best thing you could do is do an ACAT transfer to a brokerage that allows you to short. Then you could exercise the puts, and then you would have a net short position on both SIVB, SBNY, or one of the other if you only have one. Let's assume I find a broker that let me exercise. What happens next? Well, you would exercise and you'd be net short and nothing would trade until the stock's trading again. You probably have to have a lot. I mean, it looks like you have to have a 300% margin. So you probably have to have a lot of your money in account just for proper risk management. That is obviously all set by the broker. Broker to broker settlement. On a normal day for a listed stock, brokers have no problem procuring stock in T+2, and OCC has no problem guaranteeing this, but today they're halted. Uncertainty exercise. OCC says, I translate, F, we can't guarantee this. Interesting. What's next? Short squeeze risk. There is a risk. Here's why. Tons of put holders will exercise on Friday. Tomorrow, open interest is 130 million and 180 million. They can convert it to shorts and pay a high cost to borrow. I find it very, very interesting that Wall Street Bets mods are even censoring posts about it. Why would Wall Street Bets mods be censoring posts about this? They're not trading right now. The exchanges have halted it. It makes sense that the options aren't trading, and it makes sense that there's no more X by X process, automatic exercising. That makes sense. What you should be able to do is call your broker and exercise. Some brokers don't allow you to go short, so you'd have to do an ACAT transfer to a broker that allows you to short, and then you'd have to have enough money in your account to go short at the appropriate levels if they have the stock to lend out. This very much feels like it's going to be a race of a situation. So the people who are quickest are going to be safe in this situation. Unfortunately, there's going to be a lot of people who don't even know about this process, who don't even know what they can do. And even though they have a winning lottery ticket, they're not going to be able to cash it in, and they're going to get screwed over.